Hi, everyone, and welcome. My name is Wei Sim, founder and lead analyst at Homodeus Research. And today I'm joined by Craig Mason, executive chair of Complii FinTech Solutions. The ticker is CF1 and the market cap is about $15 million. How are you today, Craig?
Yeah, good. Thank you, Wei. And it's great to have this opportunity to meet with you.
Great. So, Craig has played a pivotal role in building Complii into one of Australia's most comprehensive capital markets software businesses, creating an integrated platform that serves brokers, corporate advisors, wealth managers, and listed companies across the entire capital raising and compliance lifecycle. Before we begin, I'd like to highlight 3 reasons why now is an interesting time to look at Complii. 1, the company is moving from building to monetizing. After several years investing in an end-to-end system for equity capital markets, management's focus has shifted towards growing recurring revenues. 2, the company has a strong product pipeline with multiple near-term catalysts. The company has completed major upgrades to support Tier 1 institutional clients and is rolling out its next-gen CRM and compliance platform and is embedding AI capabilities across the board. And 3, the business is leveraging a growing client base and a highly integrated platform. Complii has facilitated more than $22 billion of cap raises on its platform and continues to broaden its footprint across brokers, advisors, wealth managers, and financial institutions. So with that, it's my pleasure to hand over to Craig. Craig, thank you very much for joining us today. The floor is all yours.
All right. Thank you, Wei. So I look forward to stepping through this presentation and talking about Complii. As we get the presentation up on the screen, it's probably worth talking. We'll move into we'll move past the disclaimer page, which is the first page through their way, and then we'll move into the first slide page. So what's really and thank you for that intro, Wei. That was a terrific explanation of where we're positioned. But what this slide shows as a business, we've been listed for 5.5 years. Our focus as a business was to build out an ecosystem that was able to empower our customers to grow their business, enable them from a compliance point of view, and ensure safety and support for the marketplace and their customers. So, we have a number of facets of the business, and what we've tried to bring together is a group of assets that are able to cross-pollinate across our business, but also a kind of products that most of our clients will use, whether it's they use 1, 2, 3, 5 of them, or however many. So as we step through this presentation, I'll talk a little bit about how the cross-pollination of these businesses. But just a brief summary of the businesses. We have Primary Markets, which is our unlisted share trading facility. That's a platform to allow for unlisteds and privates, unicorns, special vehicles, etc., to be able to see liquidity in what is actually an opaque market. At the moment, we have a number of sponsored trading hubs there and 28 live capital raises available there. So the big core of the business, as Wayne mentioned in the entry, is our capital raising toolkit. That's the genesis of Complii was built around the capital raise toolkit and the compliance and distribution of that. As Wayne mentioned, we did $22.3 billion worth of funds raised in financial year 26 on that platform. It's worth noting, that's the core of our business and the primarily used product and a big chunk of our revenue line. Interesting to note on that is that, around about 80% of all equity cap raises in Australia are operated on that platform, and by number of transactions, and with the recent signing of the Tier 1 customer, institutional Tier 1 customer, that percentage of our market share in that space will continue to grow and continue to proliferate into that top end. What comes with that product is all the compliance and control tools that a dealer and an organisation would need to support their business. So not just creating a cap raising environment, but allowing the industry to be able to use that in a compliant way, in a customer efficient way, as opposed to the old structure of pen and paper and spreadsheet and card form. So that's a really universal tool across Australia with opportunities elsewhere. Enhancing, part of our business, our integrity consulting and regulatory risk obviously provides support across a bunch of our businesses and across the marketplace generally for financial services firms and brokers. And then we have our Caddy business, which is our CPT management and e-learning business. And as you can see across those categories, we have, in our Caddy business, 141 AFSL groups using that product. In our cap raising tool product, we've got over 90 AFSL firms using that product. There's a proliferation of financial services firm primarily focused around equities across our platform and our ecosystem. The game was always to build an ecosystem that created a one place for our clients to be able to access everything that was not related to ASX-listed, to market data, or to clearing, but everything else that they do in their organisation from a financial services and support their customers. We would want it to be the toolkit for that, and we've done a very good job at penetrating that marketplace. And as Wei said, we're in the process of further monetising that. So just moving on to the next slide. We've got a strong product roadmap. The cap raising enhancements in that advised bid product for the tier 1 client. We now have this product verified for over 13 overseas jurisdictions, which gives us opportunity to broaden into the global markets. Most of those markets look very similar to the Australian market in relation to regulatory frameworks. So that's a big tick for us and a big tick for the tier 1 client. Upgrades in that to accommodate the institutional client. They're aligned with where we were heading anyway, but now having a real client really testing out this system, further enhances our ability to get further traction in that space. Obviously, with our CRM, we're not talking a Salesforce type CRM. We're talking a very specific broker-dealer AFSL CRM to meet the needs of those firms. Not a global system that tries to do what Australia does, but a system that is built for our market and our client base, with all the compliance management tools in the one place. So that's a process of a 4-stage rollout. We've been doing that. The first stage has been released and is complete. That's the largest core of our product. Stage 2 is underway, and then the 2-stage will follow from there. We have a rebalancing tool recently launched, which is a subscription model for portfolio, whether it's monthly, quarterly, annually rebalancing, does all the reporting, all the order capability and so forth. So that's a new ARR tool for us. And then obviously we're doing a fair bit. We don't want to say me too when it comes to AI, but the reality is we've been very focused on how AI can improve not only our business, but our customer opportunity. Obviously the core of our business is built and it's there. It's now being able to further enhance and develop for our customers and by our customers, using those AI tools, using them for compliance, using them across our platform. And that's, gaining enormous traction with our growth and development opportunity. And again, this page talks about, where we're growing with our roadmap, how we're doing more for our customers and developing, enhancing the core product of our business and our stickiness to our customers as well. Moving on to that next page. And this is just a little bit of a update on the convertible note raise we did earlier this year, which is helping us, in that growth phase. So one of the really interesting things about Complii, we listed in 2021. We obviously went to market, raised some funds. Since that time, 5.5 years ago, we've been both acquisitive, but also, we've sold an asset. But we've been on this journey for 5.5 years, and at no point have raised any capital during that journey. We've managed to build our business from a 1.1 million revenue line to a 6.2 million revenue line last year, through both organic growth, but also through the capital we raised and our smart thinking in using that. The con note raised earlier this year, reason why it's important to talk about is when you get to that point of growth and development of the business, when you want to start gaining the efficiencies from rebuild of technology or redeployment of surplus staff, etc., that can cause some challenges on balance sheet. So we took a decision in February to raise $2 million to supercharge our ability to grow and develop but also at the same time reducing our fixed expenses through staff reductions, through technology reductions, technology closure, etc. So almost half of that 2 million was deployed immediately into reduced headcount, into the cost of reduced headcount, into rebuild of technology, which was legacy, to reduce our ongoing support and costs and so forth. So the journey of that convertible note was, Complii. We were working on the tier 1 client. We're working on the rebuild of the CRM. We're working on AI initiatives. We're deploying capital to that. Think Caddy, we're rebuilding that product in modern technology with a view to saving significant expenses in supporting that product. Just moving to the next slide there. Integrity to additionally grow where we can, have additional resources to gain revenue, implementing and cross selling into our Think Caddy business and across our entire ecosystem, and likewise in primary markets to grow out the business and the opportunity there. So what we really tried to achieve with, not just with that C note, but with the last 5 years of being acquisitive and merging businesses, is to actually gain the efficiencies across those businesses. What we see is a lot of businesses, when they do that sort of roll-up activity, they fail to actually cost out and gain the enhancements that come from the roll-up. So even if I just look at our staff base, over the last 2 years, I think we're down to 32 staff across our business from a high of 48, and our revenue continues to grow. So we've deployed those funds to grow the revenue, improve the cross-sell, improve the technology, and reduce the cost of the business, with a line of sight to focus on not just organic growth, but profitable growth in our business. So just moving to the next slide. Yeah, so we always like to talk about ARR. ARR is obviously the most important component of especially a tech business. Our ARR, with the exception of 1 quarter, has continued to grow pretty much since inception of this business. We're now pleased that we're narrowing in on that 4 million annualized, or just over 4 million annualized ARR as a business. Our customers are very sticky. The biggest part of our business is obviously Complii, and it's always good to see that we have ongoing double-digit growth in ARR, and continuing to cross-sell across our businesses. So the ARR growth as a business, we'd like to see ongoing double-digit growth in ARR. The important thing about our growth in ARR is that it doesn't come with additional expenses. So we are getting to that point of scale for the business to start really growing and enhancing. The other thing with our business is that when we look across our assets, we are still rolling out to our customers additional capabilities and additional use of those assets. So, one customer may only use parts of Complii and not, primary markets or Caddy, and then they'll use more of Complii, and then they'll use part of primary markets and then Caddy. And ultimately, the game is to have everybody using all of the assets. It's all a one sign-on model, and it's efficient. And one of the really interesting things coming out of the AI journey at the moment is, it's well documented now, is that customers aren't moving for new technology. They're not moving for a cheaper price. They're staying with their incumbents and seeing AI improvement and product improvement. So one of the challenges for a lot of technology companies is to build something that someone wants, but then getting the customers is the hard part. So what we've done, I think, quite well over the last 5 years is we have such a significant footprint, and the majority of the broker, dealer, and AFSL firms in the equity capital market space in Australia are on our platform. So it's now about how do we give them more, how do we use AI to help them more, how do we give them more of our products, etc. So we're probably slightly ahead of the curve because we've actually got the customer base. Now it's actually demonstrating we've got more that they want to use, more that brings value to their businesses, and it does it in a more efficient and compliant way.
Great. Before you go on, can I ask you just to go through one or two sentences on what each of Complii FinTech, primary markets, ASG, and Caddy are?
The actual revenue numbers?
No, just what the businesses are.
What they are. So Complii is the core compliance technology which builds up a compliant framework from advisor onboarding to client onboarding to know your client to AML through to statement of advice through to record of advice through to when they're trading, what capital they're deploying into what types of products, etc. So it's the core engine of the broker-dealer office and their compliance from the inception of an advisor through to a customer through to an IPO. So everything that goes around building up that compliant advisor, customer, IPO, cap raise, whatever it might be, that's within Complii. That's where the advisor bid. That's where all the cap raising goes on. Primary markets is the unlisted marketplace. So a lot of our clients do cap raises for unlisted. They do secondary transactions for unlisted. That's where the primary markets business fits into that. The ASG business is an AFSL corporate authorised rep structure for corporate advisory firms that don't have their own AFSL or wish to use our products. And the only way we'll actually take people into that ASG business is if they're using our compliance products because we know they're compliant. So that's an authorised rep structure. And the Caddy business is our CPD advisor education tool. So the cross proliferation between all of those businesses is that every Complii client probably needs to use primary markets and Caddy, and every primary markets client probably needs to use Complii and Caddy vice versa. So it was bringing the assets together that customers were already using fragmented, but bring them all into one place and into one sign-on. So that's where we'll get the cross-sell into that business.
Excellent. Thank you.
Just talking about our growth strategy, and this is a slide that's consistent and has been over the last 5 years and sort of sticks, we stick to our path. And that's how I think we've got to where we are now in a positive way. We continue to look at, acquisitions of complementary technology and integrated services. That's how we've got the assets we've got. And there's more that people use that are fragmented. What we are seeing with our customers is they don't want many vendors. They just want vendors that have many products. So we'll continue looking at those opportunities and how we can enhance our business through that. Customer value, continued product and service innovation. It's one of the focus things. We live and breathe for what our customers need next. We are not a tech company that builds and hopes people want it. We're a tech company that takes counsel and advice from our customers, multiple customers. Pretty much any rebuild of any of the products that we've done, we do our think tank and then we actually go and test that with all our customers before we build anything. So we make sure that, we're not doing the Homer Simpson and building the most bizarre car. What we are doing though is listening to our customers and building what they need for their desktop. The organic growth through cross-selling, that's just what I was talking about. We are getting greater penetration across our clients into more things that we're doing and so forth. And then continue to grow the market footprint. Now, this is where, now that we've moved into tier one land, we're going to see a little bit more activity, I think, there. We are the go-to space for cap raising tools, but we can see that our product is not just for the use of broker dealers and cap raising. It can be used for debt. It can be used for wealth managers. It can be used for banks. It can be used internationally. There's lots of other opportunities, but we're certainly not getting on a plane in business class and spending a bunch of money overseas. The only way we'll take it to other markets and other environments will be through customer-led capabilities. Just moving to the next slide, the investment thesis, again, this is for, everybody to consider, and when looking at us as a business, we've spent a lot of money building this business and building the ecosystem. When I get asked the question, which I'm sure someone will, is, surely under AI, someone can just rebuild it. And it's like, yeah, that's easier said than done. But the reality is, the customers aren't just moving because someone came up with the exact same new version of what we've got. But so what we continue to do, our total addressable market continues to grow, as I was just mentioning, internationally, but also through acquisition, through our product development. So our total addressable market is significantly larger than what we currently got and what we see right now. Our integrated modular offering, the fact that we actually have it all integrated into one place and it can be one sign-on, single sign-on, very attractive to a lot of customers. And we do have a very clear growth plan. As I said in one of the previous slides, our focus has been over the last period of time, reduce costs, grow revenue, improve the efficiency of the technology. So now there's just more of that. So if we can continue to grow as we have some jump steps in the process as well, we're getting to a really nice place as a business financially. That's the end of the presentation proper. Love to field questions around the room, and any that you might have there, Wade, that's come up through the screen there.
Okay, great. Thanks, Craig. That was a great presentation. So let's start with, there's quite a lot of different parts of the business, and thank you for explaining, the 4 different pillars there. And you mentioned that cross-selling opportunity available to you. Are you able to give us a sense as to how many products each of your customers are taking now, and what kind of expansion opportunity you see for your existing client base?
Yeah, absolutely. So fantastic question. So if I look at, and it's always difficult to give a 20-minute explanation of such a complex, large business. But so in relation to how we cross-sell what we see. So if we just take Complii, for example, some of our clients will take Complii, and Complii is broken up into 10 or 12 modules. Now, we just turn those modules on as they want to use them, right? So a full service broker firm could use all 10 or 12 modules, but usually they start with 1 or 2. And then 3. And then what ultimately across our client base right at the moment, just within Complii, most organisations are still only using between 2 and 4 of the potential 12 modules. Now, every one of those Complii clients has an AFSL. Every one of those Complii clients has CPD, e-learning requirements. So therefore, every one of those people should use Caddy, which is integrated. So that's where the cross-sell to something like Caddy comes in. So at the moment, we've grown Caddy from, I think, 100 users when we first bought that business to, I think, some 1,400 users across 140 AFSLs right now. But when I look across my client base of Complii, we can see nearly 4,000 users. So there's an opportunity for us to double or treble the amount of users on Caddy as a result of Complii. There's also an ability for us to double or treble the amount of modules our customers are taking from Complii. And that's just within the universe we've already got. Then when we look at primary markets cross-sell, as I mentioned, when 80% of all equity cap raises are operated on our platform, and a big percentage of those are in unlisteds and privates, then there's a secondary market need. So that's where that primary markets platform comes in, and we are starting to see that. So again, it's all in that single sign-on type capability. So across that, and then the Mintegrity business, Mintegrity is a compliance consulting firm. Now, every one of our clients is an AFSL and has compliance needs and compliance review needs. So that whole cross-sell, and one of the things with the Mintegrity business from a cross-sell point of view is when that business sees an opportunity where an automated tool like Complii or Caddy could be better deployed in one of those customers, we leave technology behind. So a lot of consulting firms go in and do the consulting work and leave humans behind. Our goal is to leave technology behind. All right, and further cross-sell into that.
No, that makes a lot of sense. And so you mentioned that cap raise is really the core business for Complii at this point in time. 80% of the companies, using it. What size? Do you have like a size of company or a typical industry or any logos that you can mention just to give us a sense as to what your typical client looks like?
Yeah, absolutely. So that ranges right from boutiques, small boutiques, right up to Canaccord, like the largest probably outside of the tier 1 organisations, and you'd probably argue they're knocking on the door of tier 1 now. Canaccord uses all our cap raising tools. Shores use our cap raising tools. Euros use our cap raising tools. Argonaut. So pretty much every broker dealer firm across the marketplace use the platform in one shape or form. And as I said, we recently signed a tier 1 institutional firm. We can't name them, but once that's fully live, it'll be obvious what's going on there. So look, that is when I say the jewel in the crown, it's not the biggest revenue part for us, but it's the part that is actually most attractive to the customers because that's where they make their money. And one of the really, challenging things with technology is to convince people to take highly efficient, highly compliant technology when they say, well, it's just going to cost me money. How do I grow the revenue? So that's why we always look at the advisor bid cap raise tool as it's the lead into getting a customer, because that's where they make their money, right? So once we're embedded, we hope to sell further things through them, because most financial services firms across the industry, they all pretty much do the same thing and they need the same tools. And we've got that same set of tools.
Right. And so what do you see as your competitive advantage versus the competition out there? I mean, it's amazing to see that, tier ones are coming to you. And I guess, similar part to that kind of question is just the competitive landscape. Who are your competitors? And
Yeah, good. I always love the competitor question. At the moment, there's actually no core competitor to what we do, right? And that's probably, there's two reasons why there's no core competitor to what we do. The first one is that when this was all being built and what we were doing, it's, dare I say, the unsexy side of financial services technology. Okay, so we built the part that no one really cared about other than the firms who were helping us build it. So there's no competitor that does what we do, and that's why we quite comfortably say we're not in the clearing space, we're not in the platform space, we're not a market, the ASX, we're not market data. We're the unsexy part. But interestingly, the unsexy part is the safe set of hands in the whole structure. So when I say we're not one of those four, we take feeds and connections to all those. So we become the glue in the middle. So that's quite difficult to replicate, especially when you can still see our revenue line. It's still a small segment. The upside is enormous, but the reality is we're 10 years into this. And replicating that is quite difficult. Part two to the answer is that the customers are very sticky, because once you build your, I'll say, reliance on a platform, a compliance platform like this, is that the entire history of the organization, right from when they sign an advisor on to using to a firm, their compliance is done here. The customer is done here. Their cap raises is done here. Their education's done here. So there's a whole plethora of reasons why it becomes incredibly sticky. And as I said in one of the earlier slides, getting customers, a tech company getting customers is the hardest part. We happen to have all the customers, right? So now it's about giving them more. And customers, as I say, everyone wants to talk about price all the time, but at the end of the day, we're not an expensive service, and people don't change for $5. It's too hard. Once you've built your business up on something like Complii, even if a new Complii competitor coming along, and we're not being arrogant about it, if a new Complii competitor came along, A, it'd have to be cheaper, and B, to get 100 clients to move, to take what is a quite small segment of the market is very difficult. So that's I suppose the glue we've created across our customer base. A lot of loyalty. The other thing we do is we are not like a lot of tech companies. We're not a virtual business. We're a pick up the phone, we're their business. Right? We have very strong customer service ethic. We're very strong engagement with all of our customers and so forth. So we like to think that, our competitive advantage is not our technology, even though we are at the leading edge of what we do. Our competitive advantage is our relationships and our customers. And winning new customers is actually primarily a result of customer word of mouth.
Right.
So that's what most of our customers come from, another customer having said, you should be using this.
That's good to know. I do think that at the end of the day, financial services is very much a relationship industry. So, focusing on where it counts is very important.
Yeah, absolutely.
Yeah. In terms of the size and the margin, you touched on the 4 different businesses, but maybe if you're able to give us a bit of an idea. You mentioned that cap raise is not the largest, but it is the most important. But in terms of the relative size of the different businesses and the margin profile.
Yeah, absolutely. So Complii, if I carved it up, Complii is probably the better part of 65% of the revenue line, right. And then the other businesses make up between 5 and 15% each, right? So, but the size of the market is always a really interesting question, because when we say we've got 6.2, 6.4 million worth of revenue right now, I think the market opportunity for us, if everybody took 10 modules, not 3 or 4, everybody used 4 or 5 products, not one, you exponentially multiply, potentially a multiple of 10 to 20 times what the current opportunity is. That's just within the client base we see. But the total addressable market, and this is just Australia, the total addressable market is easily a 15 to 20 times the size of what we are right now. Because it's I use that expression, the unsexy side of the business, it's also the kind of people we pitch this business to. Usually when you talk about compliance, you're pitching an efficient compliance tool that's going to replace the human doing the role. So that's always a very emotional conversation, right? Any outsourced conversation is emotional. My background is clearing businesses. So I've spent 25 years helping people understand why I don't need staff anymore, right? So that's always going to be a challenge in the conversation. So that's why it's so important that we have the lead in with something like the cap raising tool, where the business wants it and they don't care, just get it for me. Then you get to move into that sticky phase of, yeah, have you looked at this? We could help here, etc. But the addressable market is a significantly larger number than where we are, and it's probably a magnitude of 15 to 20 times in Australia what we are.
Yeah, that's crazy. It's a lot of upside potential. And you also mentioned the offshore opportunity, expanding into the other markets now. So can you give us a bit more about that? And you mentioned before that you're really taking quite a conservative approach, which I like, which is really going with existing clients rather than just trying to go out there and spray a lot of money on sales and marketing. What are the next regions that you're looking at? Are there any case studies that you can provide us?
Yeah, absolutely. So the really interesting one for us, so if I look at any Westminster law system around the world, that includes, whether it's Canada, the US, New Zealand, South Africa, big chunks of Europe, etc., they're all targets for us because the cap raise structure is very similar. We have already deployed this product into Canada proper right now, and we know that we can deploy it into New Zealand, but New Zealand's quite a small market. What we are seeing with the especially the Canadian and North Americans at the moment have taken a particular interest in acquiring Australian capital markets firms. So clients like Canaccord, for example, they're a massive Canadian organisation. They're one of our larger clients here in Australia. What we do for them here in Australia can be done in Canada. Likewise with Euros and the announced deal with Bank of Montreal. So we see Canada as probably the next key market for us. We have already deployed the product there to a couple of customers, and we're working with some of our larger customers, hopefully to deploy the product with them. As I mentioned in one of the previous slides, we're now endorsed in 13 jurisdictions as being enforceable for our Advisor Big product, the electronic confirmation product. So that's opening up a whole bunch of opportunities, not just for Australian clients trading into the rest of the world, but foreign market clients who want to access a product like ours. And what we've done from a case study point of view, because again, this is the unsexy side of the business, there's actually only a handful of cottage organisations who've actually tried to do this. A lot of firms have tried to do it internally, but again, it's expensive to maintain your own technology in a compliance area that's not your area of expertise, when the rest of the market can then access a tool like ours. So Canada's a really interesting market for us, as is other parts of North America. And we think our customers and some of the majors we're talking to at the moment will be very supportive and assist us in that way, if that makes sense.
Yeah, that makes a lot of sense. I've got a question online from Neil, so I'm just going to unmute Neil and allow him to talk. Hi, Neil. If you'd like to go ahead.
Yeah, hi. It was just a very quick, simple question regarding revenue concentration by customer. Have you got any customers that are a significant portion of your revenue stream?
Yeah, thank you for the question, Neil. And I probably should have got ahead of that one. The reality is, because we have such a diverse customer base, there's no client makes up more than around about 6 or 7% of our revenue base, even our largest customers. So there's less of a revenue concentration. It's more of a distribution for us as a business. We'd love to see some of those customers being far more concentrated by spending more with us. But at the moment, we're pretty neutral across the fact that the largest customer is probably 6 or 7% of our revenue.
Oh, that's good. It's quite diversified.
Yeah.
Just moving back to discussion on offshore interest in Aussie firms. Do you see yourselves ultimately as being a takeout target, or what do you think the longer term game is?
Look, it's always a question that comes up, and having built a number of businesses in the financial services space, and this is probably the most unique business that I've been involved in the financial services space. What internationals and major bulge brackets firms do is buy things; they don't build things. And what they tend to do is buy organisations that have already got the footprint in the customer space. So we're not at the moment looking for suitors. We've got a journey and a plan to continue to grow and develop. But at the end of the day, as and I'm sure there's some desk notes that have been floating around and been published that would talk about the potential acquirers of a business like ours. So if you're a platform, or you're a market data system, or you're a new entrant exchange, or you're a clearer, and you want to work out how to put your foot on the majority of the AFSL and broker dealer firms in this country and be on their desktop, that's where we sit. So from that point of view, we don't run around worrying about who wants to buy us or what's going on. But the reality is, we have probably the most expansive customer base through, as I say, over 100 broker dealer and AFSL firms, through over 4,000 advisors and planners, through cap raisings, most of the Australian marketplace. So we've got a pretty interesting footprint in the marketplace that may turn up on someone's radar at some point, and especially not right now or not in 6 months, who knows? But given the Canadians are coming here buying Australian broker firms, we have all those broker firms.
Yeah. I'm sure if I was looking in getting a foothold in the Aussie market, then I'd be looking at Complii. One more question, which is just on the con note that you did earlier this year. So it looks like it's helped accelerate the growth quite nicely. Do you need more capital to further turbocharge the business, or you think you're done for now?
So it's twofold to that. One is obviously with the most of the rebuild has been done, and AI has been very helpful to us over the last 12 to 18 months. We don't need huge expansion capital. Most of what we do is either R&D or paid work. So again, back to the whole scenario, we don't build things and hope people use them. So effectively, the works we're doing for major firms right now in build are funded work. We don't build it and hope they use it. We actually pay for it that way. So we don't need capital. Our focus is to get this business to be profitable, because that's the the last tick in the box as far as I see. And we don't need significant amounts of funds to get to that point. We just need to be very focused in the very near term, which we have been. Clearing the decks, using that C note to clear the decks, was the appropriate thing to do, because it reduced costs and accelerated our rebuilds of technology and expansion to therefore put behind the expense base. So the answer to do we need more money? No. If an opportunity comes up that we like and we think fits with our business model, then obviously we'll be all ears to go and talk to brokers about raising funds. But at the moment, we won't need to raise funds.
No, makes sense. And to your point, it's not like you've come to the market every half year cap in hand. So you've got a good track record.
Yeah, and I think with that C note was a really interesting one for those who have followed it. It was done at a really interesting time. A war had broken out basically the day we announced it. Both Alison and I, as the MD and chairman, we committed 25% of it ourselves personally, and we had no trouble procuring the rest within about 4 phone calls. So there's a lot of positivity around our business, and the broker dealer space, who you always go and tap when you need some funds. They're all our clients, so they understand our story really well. So we didn't want it. We probably could have raised a heap more, but we wanted to be sensitive to where we needed to be with it. We're not a cash box, and we're not spending money like drunken sailors. We're on a path to an outcome here.
Yeah, no, it makes sense. All right, well, that's all the questions, and we've gone on for 40 minutes, so it's a good time to call it. Thanks, Craig. That's been a very informative call. I've learned a lot. Sounds like a great business, and you guys are in a great position.
All right, fantastic. Thank you very much, Wade, for having me on.
Yeah, my pleasure. Cheers, mate.
Cheers.